Recursion Pharmaceuticals is trading live at $6.36, which is a significant drop of $0.43 or 6.33% on the day. And while many traders watching their screens on platforms like the Robinhood app or SoFi Invest might chalk this up to standard volatility in a notoriously choppy sector, what they are likely overlooking is the undercurrent of institutional repositioning. The real story today isn't just about a red number on a screen. It's about the subtle but telling patterns in trading volume and the market's shifting patience for companies that sell a future vision but burn through present-day cash. The expectation that has surrounded Recursion for years has been one of a technological forerunner, a company using artificial intelligence to dramatically shorten the time it takes to discover new medicines. It's a compelling narrative, one that suggests an almost inevitable disruption of the traditional pharmaceutical model. This is the story that has attracted a considerable amount of capital, from sophisticated funds to individuals managing their own self-investing portfolios, who see the potential for explosive growth, something akin to getting in early on the next Nvidia stock. However, the reality, as evidenced by today's sharp decline, is far more grounded and frankly much more brutal. The market right now is less concerned with Recursion's long-term scientific promise and far more fixated on its immediate financial health in a macroeconomic climate that is unforgiving to pre-revenue companies. Today's price action isn't a critique of their AI platform. It's a direct reflection of anxiety over cash burn, a high interest rate environment that makes future profits less valuable, and the long, uncertain road of clinical trials. The expectation is a story about innovation. The reality is a spreadsheet of expenses versus a pipeline that still requires immense capital and time. This disconnect is where both risk and opportunity reside for anyone considering an online investment in this name. The selling pressure we're seeing today began early in the session and has been persistent, breaking through a couple of key technical support levels that traders using more advanced tools on the Interactive Brokers platform would have been watching closely. The volume accompanying this drop is also noteworthy. It's trending significantly higher than the daily average, which suggests conviction behind the selling. This isn't just a few retail investors getting shaken out. The size and consistency of the trades indicate that larger players could be trimming their positions. This kind of institutional outflow is a critical data point that often precedes a more prolonged period of downward pressure. This company-specific weakness is also happening within the context of a mixed day for the broader biotech sector. While the entire industry is sensitive to shifts in investor risk appetite, Recursion's drop is steeper than many of its peers, pointing toward factors unique to its situation. When you are assessing a stock, it's vital to separate a sector-wide tide from a leak in a specific boat. Investors who diversify using fidelity ETFs that track the biotech industry understand this principle well. It helps cushion the blow from a single company's bad day. For Recursion, the issue seems to be a growing impatience. The company has forged high-profile collaborations with giants like Bayer and Roche, which lend immense credibility to its platform. These partnerships come with upfront payments and the potential for huge future milestones. But the market's memory is short. After the initial excitement from those announcements fades, the focus inevitably shifts back to the timeline. When will these partnerships yield a drug candidate that enters a late-stage trial? When will the next major data readout occur? In the absence of a near-term catalyst, the narrative gets hijacked by macroeconomic fears. The Federal Reserve's stance on interest rates has an outsized impact on companies like Recursion. Because their value is based on earnings projected far into the future, a higher discount rate makes those future earnings worth less today. It also makes raising additional capital more expensive, a critical consideration for a company that is not yet profitable. Any serious online investing strategy has to account for this top-down pressure. It's not enough to believe in the company's science. You have to believe it can financially weather the storm until that science bears fruit. For those who may be less familiar with Recursion's core business, let's clarify what they actually do. At its heart, Recursion is a clinical-stage biotech company that aims to industrialize drug discovery. They have developed a platform, which they call the Recursion Operating System, that combines automated wet lab biology with sophisticated computational tools. In essence, they run millions of biological experiments in parallel, generating massive high-dimensional datasets. Their machine learning algorithms then analyze these datasets to identify relationships between genes, diseases, and potential drugs. The goal is to map biology in a way that allows for the rapid identification and advancement of new therapeutic candidates. Their business model is twofold. First, they are developing their own internal pipeline of drugs in areas like oncology and rare diseases. Second, and perhaps more importantly for their current valuation, they partner with major pharmaceutical companies. In these collaborations, they use their platform to help their partners solve complex biological problems or advance their own drug discovery programs. This hybrid approach provides them with both the long-term high-reward potential of their own drug pipeline and the nearer-term revenue and validation that comes from working with established industry leaders. Their last financial report highlighted a substantial cash position, which is their lifeline. However, their net loss per quarter, the cash burn, is also significant. The simple calculation of cash on hand divided by the quarterly burn rate gives a rough estimate of their financial runway. The market is constantly doing this math, and any perceived acceleration in spending or delay in incoming milestone payments can trigger the kind of sell-off we're witnessing. This is a level of scrutiny that established profitable companies like Apple stock simply do not face. Looking forward, the path for Recursion is defined by this tension between its visionary platform and its financial reality. The optimistic scenario, the one that bulls are holding out for, hinges on a few key potential events. A major catalyst would be positive data from one of their ongoing clinical trials. A successful trial readout would not only validate their discovery platform, but would massively de-risk a specific asset, likely causing a dramatic repricing of the stock. Another significant positive would be the announcement of a new major partnership or the expansion of an existing one, bringing in a substantial, non-dilutive infusion of cash. For those building a portfolio with a long-term view, perhaps using a tool like Schwab Intelligent Portfolios, these are the milestone markers they are waiting for. The expectation is that the technology will ultimately prove itself in the clinic, silencing the doubters and rewarding the patient investors. However, the reality requires an honest assessment of the considerable risks. The most obvious risk is clinical trial failure. Biology is incredibly complex, and even the most promising preclinical candidates can and do fail in human trials. For a company like Recursion, where so much of its valuation is tied to the promise of its platform, a high-profile failure could be devastating, not just for the specific drug program, but for confidence in their entire discovery engine. Another pressing risk is the need for future financing. Even with their current cash reserves, the cost of running multiple clinical trials is immense. It is highly probable that the company will need to raise more capital in the future, likely through a secondary stock offering. Such offerings dilute the ownership stake of existing shareholders and often put temporary pressure on the stock price. This is a fundamental aspect of investing in the biotech space that anyone using Fidelity Brokerage or Interactive Brokers to trade these names must understand. It's a company with huge potential, but equally large hurdles. Let me know in the comments, what percentage of your portfolio do you allocate to speculative biostocks like Recursion? It's a critical question of risk management. The competitive landscape is also heating up, with a growing number of companies attempting to merge technology and biology. While Recursion has a head start and a truly impressive operational scale, it is not without challengers. The ability to maintain a technological edge and continue to attract top talent will be crucial for its long-term success. The path to profitability is not guaranteed, and the journey will likely be marked by periods of high volatility, like what we're seeing today. In summary, when we look at Recursion Pharmaceuticals trading down at $6.36, it serves as a powerful case study in the conflict between a compelling long-term story and the market's unforgiving short-term focus. The expectation is that its advanced technological platform will inevitably change how we discover medicines. The reality is that this process is incredibly expensive, fraught with scientific risk, and currently unfolding in a hostile macroeconomic environment that punishes companies without positive cash flow. The sharp drop today is a manifestation of that reality. Investors who are drawn to the promise must be equally aware of the financial and clinical hurdles that lie ahead. While some using trading-focused platforms may see this as a chance to buy a dip,